with us there after the 6th of the week of July. So yeah, we're looking forward to having y'all. It's been great. Everything's getting tuned in over there, and Z is working his butt off getting ready for the launch of Carnivore 33. So I don't envy him, but I'm really happy to be a part of it. But I'm glad
it's been a fun exercise. We've got obviously the interface that we have to deliver to you guys that you're going to interact with to deliver the information, but we also have to build the process around it, which is infinitely more complex. But we're looking forward to really sharing with you what we've developed in Bacara or at the Bacara, and I'm excited about integrating this process that we do here at Carnivore. So lots of great things coming, artificial intelligence driven, and I think will be another big improvement in our abilities to search through huge quantities of data and find winners for you guys. So Carnivore continues to evolve. I know if you guys have been here from the beginning, we've come a long way. So thanks for being here. This is our 78th call. It's June 29th, 2026. If Trader Z sounds a little flat today, guys, it's because he's a little bit under the weather. Battle a little bit of stomach issue. So just bear with me if I'm a little bit slower or less animated than normally today. All right. Hey, remember, we're not a registered investment advisor. Past performance is no guarantee of future results. All Carnivore trading portfolios are hypothetical. Nothing on this call should be construed as individual investment advice. And you should always remember to do your own damn research. Special thanks to all the people we share with you every week. We are what we like to think of as an aggregator of some of the best minds on Wall Street and some of the best researchers on Wall Street. Then we kind of comb through that and search for what we think the most timely ideas are, and we use our own systems to verify and check. But there are a lot of great traders out there, and when you're at Carnivore, you're part of a big group of them. I saw this one today and thought it was appropriate in this environment. This is something we all struggle with here. I know at Carnivore, the desire is always there to be in the market and to be playing and to be trading. In certain environments, it just makes more sense to trade less, trade smaller. And I think the last few weeks have obviously been that environment. We're dialing down the number of positions that we're holding in the short-term portfolio. We've raised some cash in sector rotation. We're still fully invested long-term, but don't overtrade through the summer, particularly when we're out there telling you, hey, look, you're in the doldrums. You're in the part of the season where you see this type of weakness. Thought this was super fascinating, giving all the discussions about memory. In 1956, this is what 5 megabytes of memory looked like. And in 2026, this is what 1 terabyte looks like. So this is a fascinating look at, what technology has done to the memory space and where it's going. Memory is really hot right now. We're going to talk about Micron's earnings that came up. Final observation for today. This is more for you retirees and for you portfolio managers and financial advisors. We've really tried to, talk about the bond market bear that we've been in now since COVID for many, many years, and the impact that it's having and had on stocks. And I know we're a stock trading service, but one of the things about Carnivore is that we're very serious about our macro analysis, and we try to add value and let that help us find alpha. And one of the things that we've noticed that's very important for bonds and people that use them is that they're less effective now as an equity hedge, and it's been this way since the pandemic. And if you're out there, running retiree portfolios and you're 70-30 or 60-40, I highly encourage you to look at your stock bond correlations and portfolios and really try to dig deeper, maybe within the fixed income area to find value for your clients, because I don't think you can just allocate to treasuries and corporates and get the same benefit that we grew up with from treasuries and certain fixed income securities. So definitely something that's important to watch. And I'm going to talk about the bond market. I'm going to actually talk a lot about some top level stuff today, which we don't always do. So, hey, this was super important. I thought, given the nasty pullback we just had on Friday and last week, every big winner paid the toll. Looking at like BE on Friday is a good example, down about 18%. These are the top 5 multi-bagger stocks over the last couple of decades. Amazon, Apple, Monster Beverage, Tesla, and Netflix. This highlights the biggest drawdown that those stocks experienced during that run up. So you can see, Amazon fell 94% after the dot-com crash. Apple fell 83% at the same time period before the iPhone was released. Monster Energy drink, has just had an unbelievable run for the last 20 or 30 years. Still had a 70% decline. Okay. We got Tesla that's had a 74% decline. Here's Netflix down 82%. So, guys, great stocks and great companies that are going to go on to continue, appreciating in price can fall 60, 70, 80% in price. Okay. So, you've got to know that here all 20 of the best performing U.S. stocks from 1985 to 2024 fell at least 55% at some point. Guys, that's why the cutoff point on the long-term trade list is around 50%. I know it seems ridiculous, like it's such a wide stop, particularly when you compare to the other strategies that we have, but that's what we're trying to do, trying to give these things a leash to run in some ways, because these stocks are very volatile and they move around. And so if you are buying them and surprised, like, oh, I bought a great company that fell 18% like BE. Guys, stocks fall for a lot of mechanical reasons, for short-term reasons, but ultimately the fundamentals drive the stocks higher. So here's the trading funnel. As I said earlier, guys, I'm going to spend some time up here at the top of the funnel again today because there's a lot of things happening in the world, politics, at the Fed, interest rates, bond market, crude oil. Macro has been kind of on the back seat for a while now. We've had a stable kind of dollar regime. Crude had come in and kind of destabilized that macro stability in commodities this year. But nonetheless, we've been locked into a pretty consistent environment where the Fed's just kind of been holding rates steady. They can't really raise here. They can't really cut here. They can't get inflation down to 2%. That's keeping a lid on the bond market. And that in itself is starting to become, I think, problematic longer term. But, as we've told you guys on these calls consistently for about the past 3 months, the 3 primary macro catalysts poised to drive stocks higher, if we're going higher from here, which we still believe we are lower inflation, declining bond yields, and accelerating corporate earnings growth. Okay. Out of those 3, the only one that we've gotten conclusively is the third, accelerating corporate earnings growth. Okay. Now, we are seeing some signs finally of some cooling in rates. So let's look at the 10-year yield. And we've shown this to you guys on the last few calls. We peaked up here again, sub, 4.6, 4.7 on the 10-year. And we've declined consistently since then. We're back down below the 50-day moving average, down to 4.37. 200-day sits around 4.2. So housing, automobiles, anything that's interest rate driven would be much happier at a rate of 4.2 or a sub 4 rate in the 10-year. Okay. So remember, guys, when we talk about bond yields lower allow you to bring those future earnings back, to current present value at a much higher rate, at a much better rate. Lower rate gives you, higher multiple. So if we could get lower rates, we could get better multiples, right? But right now we're caught in this environment. We've been caught for about 6 years, guys, quite frankly, where rates are too high for housing. Rates are too high for a lot of interest rate sensitive parts of the economy, but rates are not evidently high enough to kill this last 100 basis points of inflation that we have. Now, granted, what we did in Iran did not help the situation with oil, but that hopefully is going to be proven to be a short-term phenomenon, right? But we've just been kind of stuck, guys. We've been stuck with this 10-year, this trading in this range for years. And you just can't get the market to sort of rally the bond market. And it's a problem, okay? Because this is a huge asset class. A lot of people are invested. In fact, we tell you guys all the time, this is the most important market in the world. And here again, this is all being driven by the inability of the Fed to cut and the inability of the market to wring out this last level of inflation such that it can get comfortable buying these long duration assets like a 30-year treasury, right? So here we are. Here's the 30-year, this is 20-year plus. This is the ETF. So, we're down from 149 to 77. We've been going sideways here for the better part of 4 or 5 years. Okay. What I don't want to see this happen, what I've consistently said, what we don't want to see happen is for us to break this kind of cup that we're in here in rates. Okay. So right now, one of the biggest problems that we have in this market is the fact that we cannot kill inflation to a point that will allow the Federal Reserve to cut. Okay. All right. So let's talk about why this is important. And let's shift into politics a little bit. Okay. Because we've got the midterms coming up. And guys, look, the S&P 500 has never avoided a midterm year drawdown. And so here's the data, right? From 62 to 2022. I got every year we had a midterm election. The best years were 2006, where we were only down 7.7%, and 2014, where we were only down 7.4%. Okay, so every midterm year you have a drawdown. It's because there's political uncertainty that's being introduced into the market, right? You do not know for sure who's going to win the elections in the fall, but markets don't like a situation where the Republicans might lose the House and the Senate, and then you would be left with Trump now in a much more vulnerable position from the executive branch perspective in terms of trying to implement his policies, whether that be this nationalism in AI or this nationalist movement in critical metals. And so you've seen the Trump administration act in a very aggressive manner from an executive branch perspective, and they've been allowed to do that because they have political cover, right, from the Republicans in the House and in the Senate. So when you see things, and so let's move into it, okay? One of the things that has me very concerned about our country are the election results in New York, okay? A Madami-backed socialist went 3 for 3 over their respective Democratic primaries in the U.S. House, okay? The positions of these people are some of the most extreme and far left Democrats have ever seen, okay? Daria Liza, I guess is how you enunciate her name, she stated she wants to abolish prisons, abolish ICE, abolish borders, defund the police, and all deportations are wrong, including for violent criminals. She has called the U.S. an effing disgrace and said in a prior social media post, "I forgot to get napkins, so I just wiped my hand on the American flag behind me." Claire Valdez says you need to grant citizenship and voting rights to illegal aliens, use taxpayer funds for all transgender treatments, and eliminate private health insurance. Brad Lander, abolish ICE, forgive all student loans, almost $2 trillion worth, and expand the Supreme Court. Madami got a clean sweep, and it was a bad night for Hakeem Jeffries and the centrist, and it's really a bad direction for where the Democratic Party is heading, okay? Because this is what you get, right? New York City Rent Board approves historic 2-year freeze for 1 million apartments. So that's 40% of the city's rental stock now has a rental freeze. Did their taxes get frozen? Did their electricity bills get frozen? Did the maintenance costs of the buildings get frozen? Of course they didn't. This is nonsensical, right? And then what Madami has done, which is actually very clever if you're a communist, is said, okay, well, if these landlords don't maintain their buildings, we're going to set up government-owned or run organizations that then seize those properties from those landholders who are not keeping up with their properties. So if there are people on this call from New York and you own rental properties there, I would love to hear what your thoughts are about what is happening in New York City. Because I think it's pretty scary. Now, I will say this. I think that these elections are going to play out poorly for the Democrats in the midterms. So while I see it as a negative for our country that this is happening in New York City and that some of this is downstream from demographics, I do believe that in a national election, uh, the Democrat Party is going to be perceived as being too radical, and they're going to get wiped up pretty well. I believe that there are a lot of centrists in the Democrat Party who are lost right now, and they are going to be doing a lot of soul searching as the extreme socialist radical wing of the Democrat Party continues to try to take over. Okay, so I just think when you have communists winning elections in New York City, you got to take note of that from a political perspective. What does it mean about our country? What does it mean about demographics? What does it mean about the future elections? And guys, I want to touch on some things here that aren't even really related to finance. They're more demographic driven. Like, we have a problem in America. We have a problem that young people don't have a stake in capitalism. That's why they don't believe in it. Okay. The share of household wealth held by Americans 70 years is up. It's 33% of it. It used to be 19 in 1989. All the old people control all the money. Okay. And the young people, because of COVID and because of inflation, they can't get into housing. They can't get married. They can't have children. Okay. They can't do anything because wages have not kept up with inflation. All right. And so, as much as I'm a capitalist and I'm a Republican and I'm not a socialist and I'm not a communist, what I'm telling you is we have a problem as a country. We have a problem in that there's a lot of money at the top in older Americans' hands, but until now, until AI, until this build out, until the market, the youth are not getting to participate. Now, obviously, we are all participating in this AI build out. I mean, but here again, guys, a lot of young people, they don't own stocks, right? So this is how you get this sort of craziness in New York City. You have a city filled with people who don't have any stake in the game, and that ultimately leads to, I think, what is going to be a shift in politics into sort of instead of a Republican versus Democrat debate, it's really more about nationalism and socialism. Those are going to be the two platforms that are running now. You've got clearly a very nationalist profile candidate in Trump, very pro-American, very aggressive pro-American stance and policy. And then you have this other extreme wing of the Democrat Party, which is socialist, borderlining on communist confiscation and redistribution. And you got what is supposedly their centrist candidate, Gavin Newsom, proposing a wealth tax on billionaires in California. If you actually saw the first recorded message of it, it was for people with $100 million in net worth. And I joked this weekend on the Direct Access thread, if we ever pass a wealth tax in the United States, I will be going into the appraisal business, and my tagline will be, I deliver lowball appraisals. So if you guys, if we get there, just know that Dutch and I will be entering the appraisal business for all you and all your chattel that you will have to add up and value so you can tell the government what your net worth is. The absurdity of it is just mind-boggling. Imagine going into someone's home and trying to put a value on paintings and art and collectibles and clothes and jewelry, and all of this is moving, and you would have to do it every year. And you would have to get some sort of approved appraisal for everything you know. And then if you had an aggregate number at $100 million, like, people wouldn't cheat to get below that 100 million, right? So it's just, these policy ideas are just, they're absurd on the surface, right? But it's gaining traction, and that's scary to me. All right, so let's talk about this inflation boogeyman that just won't go away. Look, I've shown you this forecast from Goldman Sachs. We're talking Q2 2027. They think we're going to get core PC back down to 2%. Okay, I hope they're right. I hope that's the trend that we're going to see. As long as the Fed doesn't raise rates, it's probably okay for the stock market now. But what I'm starting to believe is something that I have told to Dutch a few times in the past, which is, I'm not sure there's enough money with the Fed this tight to drive the Mag 7 up with small caps at the same time. Okay. And so, here's the Mag 7. Got a nice bounce today, right on time. Needed to see that. Okay. But we've had this really nasty correction in the Mag 7. Meanwhile, the Russell had run up. Okay. Now look at today. The Mags are rallying. What's the Russell doing? Russell's getting smacked. They can't go up together. There's not enough liquidity in the system. I think that's where I'm starting to come to this conclusion that we need lower rates. We need lower rates if you're going to have tech and small caps run together instead of this market that was at one point myopically focused on tech and nothing else. And then we started to, tell you, hey, we're going to broaden out. We're going to get into mid caps, and the Russell's going to finally have its year this year, which it kind of has, right? We were telling you this back in April during the tariff tantrum. So we've seen that move in the Russell, but we just didn't get it in the mags at the same time, right? Not enough money floating around for everything to go up. All right. And so this is where you start to see rotation, right? S&P 500 was down 2% last week, thanks Mag 7, but under the surface, it was strong. More stocks above the 20-day, 50-day, and 200-day moving averages than at the start of the week. In fact, 65% of the components are above their 200-day moving average, which is the most since early March. So even though the indexes are the Qs are getting hammered, even though tech was getting smacked and the mags were getting hammered, you have more stocks right now above their 200-day moving average since early March. That's called rotation, okay? And that rotation really is the question of the day, meaning how much of this are we going to get and how long it's going to last, right? To answer that, I think is going to depend on the elections, right? So, basically, guys, at this point, for there to be enough capital to build out this AI infrastructure that's going to be somewhere between $7 and $10 trillion. That's the number. Sam Altman's throwing around $7 trillion again today. Okay. The government's going to have to get involved. Private capital already funded the bulk of it to this point, but now the U.S. government's going to have to get involved. Either they're going to have to lower rates or they're going to have to take stakes and fully national back these entities. Okay. It is us versus China. China just released a model that was evidently as capable as Mythos at cybersecurity breaches. Now, many people are speculating that the Chinese were able to develop it because they stole so much from Anthropic. So this is already turning into a arms race of espionage, and that's why you're going to continue to see our government, get involved in these models. OpenAI said that they have now released a model that is more capable than Mythos. I have not delved enough into it technically to validate that, but I find it highly unlikely that OpenAI would make that claim without it being at least somewhat true, with some sort of verifiable, details about why. And I know they brought that data when they said it. So we are in a race where OpenAI, Anthropic, xAI, which is now SpaceX, and maybe some of the outfits in China, like the group that rolled out DeepSeek, are competing with one another. Okay, but we need more funding to win this race. Okay, and we need money to flow into the AI ecosystem, semis, power, connectivity, network connectivity, optics, memory, all the things that we talk about. So the continued bull market bull case, guys, which after these huge 9-week kind of runs that you almost always have, right? So the market history is there to validate this thesis, right? We had the market tell us with this 9-week percentage gain that ranked in the top 20, it was number 16, okay? And with only one other scenario, that 2001 tech crash where you weren't higher, 1 year later, okay? So here we are, 1 year later, up 24%, without any other historical example being down except the 2001 technology crash. And we've told you time and time again, we didn't think this was the tech bubble because it was driven by earnings, and the biggest companies like Micron and NVIDIA trade at very reasonable multiples, okay? But the question seems to be from the market, how can this continue? How can people continue to spend money on these GPUs? How can MU continue to have this memory shortage that is driving the profits through the roof and their margins past NVIDIA's. Guys, the bull case is AI is just getting started and it's a national race. Okay. Trump, Musk, Jensen, Altman, TSMC, Micron, right? This is not the internet bubble. And I still believe that. Okay. But the bear case is the Republicans lose the midterms and politics is now this nationalism versus socialism. And Trump is in a weakened position because of inflation and this desire by a certain part of the electorate and the political apparatus for socialism. Okay. So until the election is over, this uncertainty will exist, right? It's just a fact. Okay. The trend has also began to waffle, right? We got downgraded again last week because the SPY closed below the 50-day moving average, right? So let's take a look, see where we're at today. We're back above it today. Great sign. The Q's never lost it, which is fine. We want to see that too. So we've got the 50 holding in the Q's, right? And in fact, what it kind of looks like you've got set up here with today holding, and if it can continue to hold, is maybe a little bit of this, right? We could get a series of higher lows and we could wedge into July with a good month, and we'll show you some seasons that maybe confirm that. And then coming into August, we may have some sort of run for a new high, right? Or who knows, maybe you fell there and you come back down into a base, okay? Into the midterms. That's possible too. But for now, what you have done with this correction that we've gone through is we burn off all that overbought condition that have developed in a lot of names. And now we're giving things a chance to correct in time and not price. And what do I mean by that? I mean, they can go sideways in time and correct versus going down in price and correct, right? And corrections in time are always easier to handle than corrections in price because you're just kind of waiting for it to be over. You don't get the nasty drawdown that makes you question your thesis, your investment thesis. So we've seen the model go from 5 to 4, back to 5, but now it's back to 4. Okay, this sort of whiff waffling is not what you want to see. You want to be most aggressive when we go from 2 to 5, right? And so now what I really want to see is for us to get back to 505 and kind of start running, again, to maybe strengthen the trend. Now, with earnings, we're through pretty much the bulk of the earnings season, the bulk of the important reports. Okay. You've got TSM Taiwan Semi left. That's probably your last major report. I think you're going to see fundamentally great numbers from Taiwan Semi. I mean, they almost always deliver. I don't think there's any way the numbers could probably really be bad. Now, in terms of what will drive the stock, it will all be about what they have to say, right? So here's the guidelines that they've gotten given out from management. I think you're going to see a fantastic number, probably 30% plus top line revenue growth. So there'll be no fundamental indication from Taiwan Semi that things are slowing down. And so that's kind of maybe the one that we're waiting on. On the last call, we had gone on this huge discussion of Micron, right? And how Micron had turned into the bottleneck trade in this AI build out. I'm really pissed at myself for not fully exploiting this run in Micron. The technical analyst in me kept the fundamentalist in me from fully riding this trend. If you remember, I think I sold back here in the sector rotation portfolio, or maybe even here, and took profits once. We went back in, but I should have never sold. It has been just a phenomenal trade, and it's being driven completely by an explosion in revenue and earnings and margin expansion all at the same time. In fact, NVIDIA now has lower gross margins than Micron. So you've had this commodity producer in the memory space become the critical bottleneck in the AI build out, and the company is growing so fast that it just can't really get ahead of itself from an earnings perspective. So let's say, what's the PEG for MU currently? Got a forward PE of 7.4 and a 5-year expected PEG of 0.17. Right? Below 1 generally suggests the stock is very reasonably priced or attractive. We're at 0.17. So one of the fastest growing companies in the world with the highest margins trades at forward earning multiple 7 times and 0.17 PEG. What does that mean? It means the market doesn't believe the capital is there to continue to spend. That's what it's telling you. And it's telling you that because they can't ever get the Fed and inflation to roll over so we can get some liquidity from central banks around the world to drive asset prices higher. And here again, this from B of A. You start modeling semis and forecast for like 5 years out, 2030, kind of like with this Micron. And the numbers are just ridiculous. And so I think if you're trying to find a truth for what's going to happen in the fundamentals that distinguishes this environment from the dot-com era, it is this. Okay? It is this. Because in the dot-com era, there were not earnings, there was not revenue, it was not critical infrastructure that people were using just yet. It was coming, the internet use was coming, but it wasn't there just yet. Whereas the number of people that I talk to on a daily basis that are using AI in their business or in their personal lives is exponentially growing at a rate that means that all the current compute will have demand and that there isn't enough compute for future demand, period. It's just a choice of us of whether or not we want to build it, okay? So the earnings part of this, guys, is kind of probably going to go take a back seat at this point because it's kind of known, it's baked in, it's expected, right? Whereas, we had this great earnings quarter. This past quarter, we talked about it on these calls over and over and over again, and that's behind us now, okay? All this is kind of expected. To push this thing higher now, we need lower inflation and lower yields and more liquidity, right? All right, what do we watch? Well, we've been watching the Mag 7 underperform the 493. We showed you on the last call, Mag 7s were negative on the year. Why are they negative on the year? I had that question posed to me. Simple. They're spending all their free cash flow, like all of it. Here it is. It was $300 billion in January of 2025, and it's basically gone to $40 billion. So there's your CapEx, spending from the hyperscalers, from the Mag 7, that is weighing on their stock prices. Now, here are the number of stocks above key moving averages: 5-day, 20-day, 50-day, 100-day, and 200-day. Okay, so this is the percentage of stocks above these moving averages. And what you see, guys, is this rotation that we're describing, right? This rotation out of tech and into healthcare. This rotation out of, some communication services names into materials, maybe even into some consumer staples, right? So some things that have really been lagging because we've had some real lagging sectors in healthcare and consumer staples and financials and industrials. So we've got some laggards coming to life. So that's another sign that it's not a top in the bull market. It's just rotation until it starts back up again. And guys, July is typically a great month, right? So here's Ryan Dietrich over at Carson Group, and he does great seasonal work. We share with you all the time. He was bearish, coming into June. We were here, right? Now we're here. Okay. So you've got the seasonable negative time frame behind you. You've got July here. Hey, we've got the 4th of July. It's Trader Z's birthday. So here's your 4th of July rally. S&P is positive 77% of the time. You can see the numbers here, usually 1% or so. This is from Ask Livermore on X. Great follow, by the way, if you're not following. So we've entered that time frame, guys, where July's great historically. The June sort of weakness period is kind of past, and we got this July 4th holiday that's typically positive. Now, the other thing that we had last week was hedge fund selling of techs at like record levels. So we had a good puke fest last week, and maybe given the action that we're seeing in the Mag 7 today, potentially, hypothetically, we could be trying to find a bottom here. We had written about this in the wrap last week. We had drawn a long-term chart out, I think probably using the weekly. No, it was the daily. So here's the daily, and we had shown you, at these levels of oversold in the RSI, you historically were finding the bottom in the Mag 7. Okay? You can see it even here when it didn't get as extreme, but just almost. And this has been a really good indicator. You can see, bam, there it is. Bam, again. So maybe if we turn up from here, we've reached a reasonably oversold condition in the mags such that they can try to rally themselves and keep the broader indexes from going down much further. All right. Now, let's take a look at some individual stocks that are starting to look more intriguing. I had noticed some large cap breakouts last week in names like Lilly and Merck, which is actually holding up today. Here's that nice flat base you're coming out of with Merck, right? And so some of these are like multi-month too, like Lilly, which everybody knows is Trader Z's favorite mega cap pharma name, probably the only one worth owning perpetually. You're coming out of a multi-month consolidation period in Lilly, and you saw it actually in the healthcare ETF. Here's your iShares, so you can see kind of that pivot breakout in healthcare last week. Now we did get a little stretched here, so maybe a little pullback. We'll pull it back into this pivot around 66 or 67. But look, you have to take note when you start seeing mega cap healthcare names break out after being in the doldrums for what seems like years now. And it's not just healthcare names, guys. Dutch and I have been talking to you about biotech. Look at this biotech chart. I mean, Dutch and I were really keen on this sector when it was in its run, and then it went into this big base period here, right? But now you're coming out of it again. So I'm seeing biotech names pop up. One of the names I had shared over the weekend with a lot of people was mRNA. This was a big winner for us during the COVID pandemic era. If anybody remembers the Swamp Donkey, this was probably the Swamp Donkey's best call here at Carnivore.
Hell yeah.
He got us in here and we rode this thing for a couple hundred points. But I really like this setup here. I mean, look, this thing was washed out to 22 down from 500. And now you've legged up to 67. This could be a $100 stock. The 200-week moving average is way up here at 87. So you got to take note, hey, TGTX is like genomics and some of these therapeutic stuff. They're all running So just guys, when you start seeing a sector like biotech or healthcare that's been in the doldrums for months, that could be something you want to pay attention to, because these are emerging trends versus things that are stretched. Now let's look at the other end of the spectrum, like semiconductors, because I think this is probably the chart that keeps me up the most at night. We need semis to hold this trend. And it's okay if we do this for a while. And I would say probably 600 to 580 is the region I really want to see hold. What I don't want to see is this. Because if you get semis to roll over, tech's rolling over with it, the mags are rolling over with it, and we're going to get a deeper correction going into the midterms. So you got to watch this Soxhole trade to see if these names like NVIDIA, which are huge from a market cap perspective, look, here we are sitting on the 200-day. NVIDIA has respected the 200-day in this bull market for the most part, outside of just a few instances where we got, deeply beyond that. That was a big one there. But outside of that, the 200-day holds in NVIDIA. So, you need to see NVIDIA catch a bid here. There are other big names in the semi space like Intel, which just went on these hellacious runs from 40 to 125, right? But guys, I like a stock that'll run from 40 to 125 and then stay up here. Okay? So we can box out here for another month, 2, 3. That's okay. In fact, the longer we trade sideways in these tech stocks at elevated levels, probably the better it is longer term. And so, Micron, semis, and then some of the photonics trades, I think, like the AXTIs, still trying to hang in there a little bit. The GLWs broken out today. GLW is the strongest in that space, by the way. And AAOI, so that's up today. So maybe that 127 mark holds. So look, we need some of these things that got hit hard to come back hard. B was one of those names. MBIS was one of those names. So this isn't bad action today. We could probably trade sideways for 2 to 3 months in the election and rotate a little bit, right? Into some healthcare and some biotech, maybe some consumer staples even, if things get really bad. But all tech has to do is just hold up here and give me a little base, high-level consolidation, and then we can find the next entry point for the next leg up. After the elections, after the political uncertainty has been removed, that this AI build-out will proceed with full support from the United States government, okay? And so as I look through, the charts on a day like today, other noticeable things we see are the space trade potentially bottoming, which has just been nuked, whether it be a Rocket Labs or an ASTS or even a SpaceX. Okay, so PL coming back, BKSY coming back. So that may be a bottom. Hey, we're looking for maybe a drone bottom eventually. I think we might be a little early here, but I see it. I got EMPX, the battery for the drones. We got ONDS that I'm watching closely because I feel like this is a sideways consolidation. It's deep, right? But I think that 750 holds eventually, and then we leg up again when that sector heats up. So we've got some stuff working that's been getting nuked in that tech space. And here's A-Lab, close to all-time new highs. Hey, cybersecurity is the hottest software subspace by far. Palo Alto, CrowdStrike. In fact, for you DA guys, I'm probably going to have you close that OUST bull put spread early because you're going to have made all the money there, and then we're going to rotate into one of these cybersecurity names that I've been talking about, like CrowdStrike's. But guys, CrowdStrike and Palo Alto, just booming with this whole AI cybersecurity narrative that's emerging. So there are stocks out there that are running. Hey, BE, we had a nasty sell-off on Friday, but some of that was mechanical in nature. Index component going in, one index out another, so you had some forced selling. Now today you got some forced buying. Stock had run up pretty heavily, but look, this is one of the few companies that can provide off-grid power to these data centers that will allow them to go in and build them and say, hey, look, we're not draining the local grid. We're powering this ourselves. We're bringing in fuel cells from Bloom Energy to power our data center. We're not going to be using energy from the grid that's going to change the dynamics of your community. So this is a big thing now because everyone's NIMBY, or not in my backyard with these data centers. And you've got to have off-grid power that's ready. And BE is really the only company that can do it right now at scale. Now, however, I've been talking to you guys about fuel cell. They caught a big contract last week. It's on the long-term list. They are also a company that can provide this power. So this may be an emerging name that has a lot more upside. And I'm hopeful that we've caught it early and we can have a good run. So when I see these names today, running from ALS to fuel cell to ASTS to AMAT. Hey, CBRS may have bottomed. OpenAI just built its new model on Cerberus chips. Okay? And this thing IPO'd, it ran to 390, and now it's trading at 200. So this is one that might be a nice recovery trade in semis if this semi thing turns around and tries to run, if the Stoxel tries to hold for us, right? We've got names like Google running hard today. We've got Mag 7, Tesla, Amazon, Meta, even probably the biggest dog of them all has been Meta. So we've got Mag 7 and select themes working. What we don't have is Mag 7 and Russell working, right? So I would love to see us get in an environment where these two indexes could go up on the same day together. But we'll get back there when the midterms are behind us. So the sector group composition has changed a little bit, guys. We've got quite a bit of sort of downgrading happening in the systems. I've got very few stocks at the pivot. I can't get it to come up right here at the moment for some reason. But we haven't had a ton of stocks at the pivot for the last few months. We're seeing more. Let's see. I've got 1, 2, 3, 4, 5, 6, 7, 8 currently. Eight stocks at the pivot. Right now, IBD's downgraded the market to one level lower of exposure than the highest. I think it's 60 to 80. Yeah. Versus 80 to 100. So you've seen that downgrade. You've seen VectorVest downgrade a little bit. Here's the color guard. We've seen more yellow and a red now. No green. So we've seen deterioration in the systems last week, guys. We need to see some improvement this week. And we're seeing some non-tech names rise into, leadership positions. So, you got to take note. IBD 50, doing okay today. Some winners, some losers. Here's Hinge that we're long in the long-term trade. I'm gonna take profits on that day. Here's Dave that was a VN stock of the day before it broke out. I'm seeing some action in this consumer finance space. Firm, Dave. both kind of been running. But look, we're open to participating in some other sectors beside technology if we need to take, the time to let us correct or sideways trade. So we're just kind of out there looking to see what's working now in this environment that's not extended, that may be ready to continue to run even if there is rotation, or maybe ready to recover if there's been a sell-off already, right? So, but what I wouldn't do, guys, is come in and start buying as aggressively as you were 3 months ago, because the conditions are just not the same. And this political uncertainty that I described to you is real, okay? And the more it becomes all-consuming in the news cycle, the more and more the news is going to lead people to believe that there's a possibility that these crazy socialist communists can win, okay? And that's not really the backdrop that I think you want, for stocks longer term. And I think eventually it goes away. Keep your eye on that CBRS. So that's pretty much the systems check. And I'm going to let Dutch get in here and start talking about a short-term trader. He's been busy this morning.
Yeah. It's been a busy morning. Sorry.
It's been all over the place, man.
Sorry, I was late getting on. I was doing a whole bunch of trades here. BLZE and Butterfly, but BLZE is now ripping back up 15-20. So we found a good one there. I really like the small caps that have a story. I kind of wrote about this over the weekend and sent it out to you guys in direct access. The stocks that have had some kind of fundamental change in their business and aren't tied to necessarily they're not big mega cap stocks. They're undergoing some pressure. They're living in their own private Idaho. They got their own world going on. Everything's changed for them. We're seeing that there are big liquid stocks like BB, for example, that Trader Z flagged with me this morning. He only flagged a couple of stocks, and that was it, one of them. And so I like kind of hiding out in the safety of a stock that isn't necessarily pegged to the market. If the market itself is falling, like BLZE doesn't necessarily feel it because so much has changed in their life to where their revenues are going to just quadruple, So
you're looking for stock-specific stories, man, and a narrative that's strong enough to push that stock regardless of what's going on in the market.
Exactly, man. That's what I love right now. Kind of hide out from the overall market itself. Plus BB itself. So you want a big fat liquid name. There's a $12 stock. You can actually get 50 or 60 cents, somewhere between 50 on a covered call right here. So if you bought the stock for 12 and sold the 12, that actually expires in 3 days in this short week. You're looking at getting 50 cents or 40, probably getting 50 cents on that call, on the $12 call. You're locking in a 50-cent gain if it doesn't, fall. Plus, you protected yourself down to $11.50 a share on it too. But big, fat, liquid. Both the options are liquid and the stock itself's liquid. So, and you've got a fundamental story there where it's undergoing a change that the entire market really hasn't picked up on fully yet. We pegged it, I think, at $8 a share. I know that TN over in DA, one of our Hall of Fame traders over there, was on it real fast and real early for us, and we were with it. So
this is a robotics play now, man. These guys,
right.
This is not your telephone company anymore, guys. They have a platform called QNX, and it's safety certified software. Okay, it's used in automotive systems. 275 million vehicles. People don't know this. That's the problem, Dutch. They don't know that BlackBerry's in 275 million cars. Okay, and so they're going hardcore into this robotics AI thing. And if you'll notice, guys, that robotics trade today is hot. Here's BB, here's OUST, here's VPG. Look, VPG's been a boomer, and I shared with the DA guys over the weekend. This is one of the few thematics that's still powering higher. And hey, coincidentally enough, this is also the sector that Elon Musk claims is going to drive memory higher still, because these robots have to have memory as well. But Dutch, this is a good example of exactly what you're talking about, man. With this BB is kind of just in its own, ether, because people are just discovering this.
Right. So, and then the other thing is we do like, interesting stuff like PSNL, Personalis, which, you're not driving straight into, the AI theme. You're not driving straight into the, more biotech oriented stuff. Biohaven is another one. Something's going on with Biohaven. It's off $1 today, but the price action on Biohaven has been pretty good just in the last couple of weeks. So basically since May, you've gone from $9 to $14, and something's going on there. It's just really been gapping up. We have a gap down today, but it looks like it could recover and come out of there. But, look, anything we can do kind of away from the rotation that's getting hammered, so BB, PSNL, Biohaven, maybe a little bit, but really Blaze, BLZE, and BFLY, that's kind of where we've been at. But right now we're short, net short over in the short-term trading account with SPXU and SQQQ. Now, I like to put sort of a stop on things and I like to put like $1 stop on it. And we're right there actually right now, almost. We're at, what I do is I take it, I said, look, I don't want to lose more than, in this account, more than $12,500 on my shorts, because if I do that, that's kind of my stop. It's just $1 stop, and I say combined. So SQQQ and SPXU right now are off $12,190. So we're getting close to that stop out level where we would say, okay, I would say I'm done for now on the short side. But until it hits that level of pain, I'm not going to close the short out. I feel like I haven't been, necessarily proven wrong, but and being long things like PSNL and a BLZE or a BB or a BFLY, while you're short the overall market where they're rotating out of some of these big names that are depressing the market, you're running a long short portfolio, and it's not a bad thing to do. I mean, it's hard for a lot of people to get their heads around things. They either want to be 100% short or 100% long and make that bet. We're pretty used to making sector bets. Once you get into the world of saying, okay, I want to be long semiconductors and I want to be short software companies, right? Something like that. And you start playing that and you realize, well, I don't want to be over here. Or I don't want to be in retail. So I want to be short retail. I think retail is going to suck or something. And then I want to be long semiconductors. And you can really make a lot of money on that long short side. And then you're hedging yourself and being kind of market neutral in a way. So I don't know if I'm explaining this well enough or not, Trader Z, but
I think you are, in the sense that, Dutch, I mean, I think you and I have definitely moved over the last week and a half, quite frankly, probably two, that demonstrates we see some softening in what is an extended tape in that tech trade, right? And hey, look, guys, I'll be honest with you. When I start telling you that stuff is stretched, you should probably listen. I'm like the king caring about that stuff, right? So it doesn't mean, that's why I say it doesn't mean that I'm, becoming a bear. It just means that this is not, this midterm thing to me is just something that, it's just history. This is just how it plays out. Now, maybe we get by with a really shallow correction this time. And that's what I keep trying to communicate, the possibility, Dutch, that we are kind of setting up some kind of true box here. Which, if that's the case, then you're going to need to do some things like Dutch has been doing, which is he's been selling into strength and buying weakness, right? And so, like right now, it's kind of like, all right, well, we're rallying today, so we put on a little short, whatever, But if we're going to do this because we need to for a bit to let things reset, then I want to dial my exposure back a little bit in sector rotation. I want to maybe look for some new names to rotate into. I want to get out of some of the really aggressive names that we were in. Guys, the last 3 months, I've run the sector rotation portfolio about as aggressive as I will ever run it. Okay? That was as out there as I'm ever going to take it because, the swings now are not comfortable for a lot of you. Okay? You've had this huge explosive move up. Now we need to lock in some of these gains and look for our next big winners. I had too many stocks. Okay. So now we've got some dry powder. If the market firms up, we buy. If the market weakens, we sell more and raise more cash, but all in an effort to get ready for a Republican win at the midterms and then in a continuation of the bull market. Hey, Doug, you got anything else you want to highlight, buddy?
No, I'm good.
Okay. Well, guys, I'm gonna be real quick with the rest of this. We did some trades, obviously, in the second rotation I just talked about. It was all sales, raised some cash. Sold Rocket Labs, Iren at a loss, APLD gain. A lot of these were at gains. Took a lot of gains in a lot of these names. So just taking chips off the table, reducing the number of positions, and looking for a reduction of exposure into some sort of extended thematic. So those are the plays. Look out for this week. We'll be deciding come Wednesday and Thursday what we might add to or whether or not we're going to buy more. If we can hold the 50-day this week, we'll look to buy more. If not, then we won't be buying anymore. We may be selling. So,
hey, Trader Z, this CBRS that you flagged is starting to run here. Is that something the short-term trading account ought to be getting into right here?
Look, man, I think you could get back up to 220. I hate it that it's already up 12% today. So maybe if you're going to go into it, look for a down, let's see, what are we looking like on the minute here? Yeah, you just took off.
Yeah.
I see it. Look at you. Look, Dutch is on this thing like, yeah. Hey, guy, look, if you start to feel that the market's going to keep running and you look at Soxel and Soxel's running, I do think it's time for this thing to kind of get back up towards about 300.
I think we just hit the pain threshold here. Let me just double check. And so, look, I'm not convinced that, this thing isn't done on the downside, but the stop's a stop. And I'm at, I'm within $100 of it. So it looks like it's time to take look like it's very close to taking the SQQQ and SPXU and taking those off. Just letting you know that alert might just go out here shortly.
So over in the long-term portfolio, guys, we've got a couple trades. I'm going to go ahead and sell Civ. Should have sold it 2 months ago, but I think we're still up 90% or so, so I'm not going to complain. We're going to take profits in Hinge. I'm going to buy mRNA. And I'm going to buy Dutch Brothers coffee.
Nice.
Anybody like Dutch Brothers coffee?
Oh yeah, I can at least afford that one.
Yeah, that's it's becoming.
You don't need a coding book to order coffee there. You're just like order coffee. Right.
It's a unique little model, freestanding little coffee. They do ice drinks too for kids, don't they?
Yes, they do. Yeah. Yes, they do.
So a very popular destination for mothers and kids after school. The moms will pull in and they'll get a coffee, and the kids will get a ice something, and so you've got this pretty unique model. It's really tight. It's kind of the antithesis to the Starbucks, so less frivolous and sort of frou-frou, if you will. That's what my kids would say. Just kind of straight up the alley coffee and drinks.
Well, mom tells you she bought a coffee, but she got a milkshake drink.
Yeah, there you go. Right. been a very volatile name, but I think we're back kind of through this IPO, parabola. where you took it public and you just kind of based, and then now you got this handle that's kind of developed here. This is a really big cup and handle, is what I see.
Oh, yeah, look
It's
at that.
very sloppy. So this is gonna be one of those sloppy names. That's why it's going on the long term list. But I think if you can get this to kind of really conclusively break here, this could be one that could run. So we're gonna get a little exposure outside of tech. Pull 2 winners off. Add a healthcare biotech name and a consumer staples name to the long term list just to mix it up. I almost hope that I'm wrong. I hope they almost go down and all my tech stocks all start screaming and going up higher. So we'll see though. All right, Godfather, we've gone for already an hour and change, so let's start answering some questions.
You got it. We've got a couple there. First, Dan, about the recording. It takes about 5 hours to get this turned around and put those individual header lines in there. So we will make sure that everyone gets those. I think our IT person was out last week, but we'll make sure if it's not up on the site, I promise I will send out an alert with the link to the recording. We don't want you to miss it. Let's see. Bradley, we'll start with you this time. How about KNSA? Thanks, mucho.
Hey, Bradley, good call on Hinge, buddy. That was him. That was him.
Yep, sure was.
I'm glad I remembered that it was you, Bradley. But yeah, you brought that up on the call. I went back and looked at that, read more on it, did the trade. That's a very interesting company. Keep your eye on Hinge. Just because I sold it on a long-term list, I always sell too early there. So just keep your eye on them. Hey, this is one that is definitely popping up at the top of the radar. Another good find, 2.87 billion market cap. I have not had the chance to really dig into what the real story is. Remember, guys, the best way to, get your scoop on these drug companies, I find, is Seeking Alpha, probably a little bit on X and a little bit on Wall Street Bets and Reddit, or how I get a lot of my pharma stuff. But you can see we got buys across the board. We got a strong buy at Wall Street. Evidently got a good pipeline maturation. So when you want to get into these pharma names from a fundamental perspective, it's all about that drug pipeline, what's coming, what's approved, what's going to get approved, right? And if those things are lining up, then that's where you want to be. You want to be with a company that has an expanding pipeline and an expanding approval list and a story that is all about growth, because that's what the market rewards, right? So this is looks like it's scoring 27 out of 443, so it's ranking perfectly. I'm sure the relative strength is through the roof. So, Bradley, this would most certainly be the type of stock that you would want to be trading in pharma. I'm not in market surge right now, so I don't know what other names pop up in that space. It's probably KRYS, LQDA, ALKS. So these are other names that are in the exact same space from an IBD perspective. So here's LQDA, another good looking chart. ALKS, another runner. So obviously this is a hot theme within pharma. The category is, so this is cardiovascular and autoimmune diseases, which obviously are huge. These have all been winners. So this entire group has been on fire. So I guess you're getting confirmation there. Hey, Bradley, another great find. I mean, you gonna get on these calls and just give me ideas for everybody else every time? Thanks, man.
I think he does.
Yeah.
And John's another one too. John H.
Hey, if you really want to dig into these two, always go to the corporate website and go to the investor relations and look at the presentations. I mean, you find so much value. Look, maybe this is the catalyst here. We got some KPL 387 rapid progression to a phase 2 of 3 trial. Puts them on track for the next generation recurring pericarditis drug on the market in 2028. And that could be big, right? That impacts a lot of people. So you want to know and understand, like, okay, is this a big market that they're going to address? Is there a potential, huge ramp up in sales? And I find that, you can get a lot of great information from the corporate website and from Seeking Alpha, Wall Street Bets, and of course using AI as well. So
Yeah.
here's the. This is obviously a big part of what's driving this. Good question, Bradley. Next.
Yeah. So John H says, can you help me with ON? Why did it collapse?
Yeah, so I didn't have the opportunity to read
Bull.
what everyone hated so much about what they said on their earnings call. And in this
Did they say
case,
they hated their investors? Wow.
yeah,
I didn't. This is a call I didn't listen to.
I saw it though, but I didn't have time to actually dig into it. I'm glad one of you
Chris-
brought it up.
Chris
So
says
we
that
had
they're
a
buying
quick
another
recap. We
company.
had 5% year over year, so the growth kind of why with the disappointment? So we had guidance not aggressive enough. There you go. 90% of the time, guys, when a stock really disappoints on earnings, it's not the actual earnings, unless they just screwed that quarter up. It's the guidance. So my guess is they got on the call, it didn't sound bullish enough for the market. It was priced for perfection, so it had a big run. You got mixed in signals while AI data centers and some automotive showed strength. Other areas, including industrial, were recovering more slowly. Stock reaction shares fell in pre-market after hours trading post call despite the beat as the results failed to wow the market. So it's just kind of, when you have baked in expectations that are really high and you have a stock that's gone from basically 44 to 134 and then they come out and they guide weak, you get shellacked. Now, whether or not it's deserved is the real question. And that's what you're really asking. And I think it may be too early to tell. You're going to see mixed opinions on this, right? I think, oftentimes when companies are trying to recover, expectations are already sort of been skewed, if you will. Like, this is a story of like resurging growth, right? You're probably better off just going for someone that's not actually recovering. And so, I have found many times in my career that some of the best ideas that I thought I had were recovery trades. And they ended up just not being that way. The better story was the growth story. The company's earnings were blowing up, right? And so, I know there are a lot of people that like to play the value game. Like I had seen over the weekend, I looked at like Digital Turbine apps. Right? Anybody remember this stock? And so, here it is, it's running. Maybe it's a play eventually. We're at $12. It was at $100. We got good volume, but this is a recovery trade, right? This is why it happened. Why it fell to $1.08. It went from $100 to $1.18. Well, why did it do that? Well, because the market completely questioned the business model, like completely. Like, is this thing going to even exist? And this is a big company. This is a multi-billion-dollar company. So, in fact, it was like a $15 billion company. So, I would just say, if you don't have a big position in OWN, we don't have it on in any of our portfolios. It's on a long-term list and not on second rotation. If you don't have a big position, I might take my lumps and look for a better name. A story like CBRS that's working with OpenAI, and even though the stock's going down, that's kind of more of an IPO mispricing.
Z, if my math is right, and of course you guys taught this the last academy how to do this. If my math is right, before the sell-off, we were selling at 100 times earnings. So
yeah, it was egregious, right?
Okay,
right.
Yeah, that's so.
That kind of multiple gets baked in. It's tough when you don't come out and say incredibly bullish things on your call. And hey, I'll be honest with you guys. For me personally, and I think Dutch would probably agree with me, playing earnings announcements for the past 2.5 years has been like Russian roulette.
It's horrible.
It's just a crapshoot. The market doesn't respond the way you thought it would. You know, Nvidia sells off after and then it rises 3 days later. It's just like, I don't know. I've seen a lot of stocks not respond the way that I thought that they would have given the call. So I've chosen more recently to step away. I think Dutch has a lot recently too. All right, what else you got, Godfather?
Yeah, but think FSTR can keep going. That's from Will S.
So this is in one of those sectors that
It's Space SPXC.
maybe. Building materials. This is only a $400 million market cap. So just take note of that. Guys, anytime you're under a $500 million, that's like micro cap. So you got great volume coming into this thing. Good looking daily. This industrial sector's been heating up a little bit. I had a few names I had shared over the weekend. I'm trying to remember the industrial ETF. What is it? XLJ. Here's the chart. You can see not a bad little uptrend. You know, look at that. That's a pretty clean uptrend, guys, in the industrials. Compare that to mags. Right? I mean, that's been in a real uptrend versus mags, which has kind of been in this game. So I don't dislike that name. We won't trade it because it's too small. Good question.
Yeah, Russell. Hey Russell, how you been, brother? Any thoughts on XRP? Did they get the keys to the banking system?
I don't know, Russell. Look, hey, you're looking for Ripple. So look, this should tell you something. I don't even have Ripple in my
Wow.
crypto watch. I've never been a fan of Ripple. I've never understood the valuation of Ripple. I know they have the best lobbyist, for sure. So that much I do know. So look, hey, crypto, what's going on? Why is crypto selling off? Because the Fed won't cut rates. That's why it's just liquidity. In fact, it's the most liquidity-driven thing in the world. In fact, that's part of what has made me reassess all this top-down macro shit I've been hitting all you guys with the last hour. Is the fact that me just realizing, well, the reason why this isn't going up is because they won't cut rates. Keep talking about inflation, right?
Z, do you
I'm
think
so
that
sick of talking about inflation. If you guys could see my face right now and the disgust that I have on my face that 6 years after COVID, I am talking to you guys about inflation. It is just, it is my pet peeve. It burns me inside. I will never let it go. So here we have the top 10 guys. The only thing I really see happening is Solana is holding up better than Bitcoin and Ethereum and has seen a lot of activity in stocks trading. So now a lot of stocks are being traded on Solana. Hyperliquid's basing. So you're still around 65 there, looking to go to 80. Tron has held up better than the entire crypto space. I don't know, Russell. I can't tell you guys to buy a Ripple. I mean, if the only thing that I'm super bullish on right now in crypto is Hyperliquid, followed by Tron, just because it's held up the best. And then I think if you're playing Bitcoin and ETH, you're doing it because they're at record oversold levels on daily RSI. So let's look at,
And do you think that the change in the way the PDT rules, now that you don't have to trade just crypto for that, now you can trade stocks, could that have something to do with it?
Yeah. I mean, look, I think people have just been gravitating towards stocks because the action's been better. Look, you're down here at RSI levels that historically have marked bottoms. I mean, we're down here. That's a monthly chart. So this is a monthly RSI. That's the 200-month moving average. You're sitting on that. You've never really spent any time below that except for COVID and hearing the tariff tantrum probably, or at least just that sell off from 69K to 17. So, we are at really oversold levels. And Bradley, and Russell, if the whole space turns, Ripple will turn with it. But I'm not going to tell you guys to buy it. Like I said, the only name I'm really keen on right now is Hyperliquid. Hopefully, Per has bottomed. If Per bottoms here at $8-9, that's going to maybe consolidate here, in this area for a while, and then we'll leg up. And you should see that follow in Hyperliquid, which is now in the top 10. We hadn't talked about crypto because it's been dead. So
Yeah.
there's your
Until
Hyperliquid
it's,
chart, though, in a crypto bear market. Same logic applies that we use for the stock market and crypto. You look for the strongest name, and here it is. It's the only one that's performing in a bear market outside of Tron. That's not Tron. Tron is weakened a little bit, but here for the last year, you've held your own. John Weber, I hope you're out there staying strong, my man. All right, what else you got?
I think you kind of touched on this one. It's from William B. About the short-term account. Said that probably see more volume coming in July or whatnot. He said that he kind of got really hurt in June, but we go through this every June or July, right? I mean, this is common. There's nothing really outside of
guys. It's a seasonal thing. It's one of the few seasonable things that I actually believe in.
Yeah, I do too.
Here you are. There's the June swoon that we showed you, and here we are, right? And then July. So, it's very realistic we could get a nice bounce into July, and I would love for that to be the end of the correction. If it is, we'll get back long stocks. I'm open though for this to need to correct longer. Okay, so don't let your desire to play the game the same way all the time hurt you. Okay, there's a time to be aggressive. There's a time to not be as aggressive. There's a time to walk away from it all and go fishing. We're not there yet, right?
I think that's exactly what TE said. He sent me a text. He said, if it wasn't raining, I'd be fishing or doing something. That's right. We had the same thing, right? We had such a horrible beginning of the year, but then we went and flew into amazing growth. So
guys, you want to start learning to
zoom out.
Yeah, and
you gotta do like Z does, zoom out.
Look, guys, we started getting aggressive about right here.
Yep.
Okay? And we told you guys to be aggressive. And we got really aggressive. And we made all this money up to here. And then we told you, hey, we're extended. And then Dutch was like, hey, you know what? I don't like this action.
Yep,
right?
Head and Shoulders every
Head
week.
and Shoulders,
guys,
the Spice kicks in.
Yep.
He's sending me emails over the weekend like Fast and Furious, because he's been looking at charts. I'm like, Dutch is freaking me out.
No, because I'm freaking out.
Hey guys, this is how we work together. We've been doing this for so long that when the other one says something, the other one's like, oh, I got to pay attention to this, right? And
but
so
he doesn't do this on the weekend, and now like Dutch is sending me shit on the weekend. What's going on?
Jesus, man, you're freaking me out. So there we go. So learn to identify. Look, guys, this what I just showed you here again. We got aggressive here.
Right.
You made all this money here. Now the concurrent market conditions have changed dramatically. Look at that price action. Okay. Now, what we want is for the 50-day to hold and for this chart just to firm up, right? But it might not, because we have a bunch of communists getting elected to political positions in New York. right?
And there's your full circle.
That tends to freak people out just for a few months until they realize that the commies aren't going to get elected in a national election. We're not there yet. Okay. So all I'm saying is learn to identify this condition versus this condition, and then trade aggressively here, and then maybe go fishing a few days over here. Or if you have to play the game, you play it smaller with fewer positions and with tighter stops, and maybe you do different things like you sell into strength, you buy weakness, right? Which is not what you do in a full-blown bull market. You come in and you buy the open breakout and you scale into it. Okay? The markets don't always stay in that condition. It comes, it goes. You have got to learn when to start sitting out a little bit more. And also that, as I tell people at the academy, cleanse your mind of your peak equity. Okay? Go back to the process. Use your stop losses. You use trailing stops. You stop out of losers. It's not about top ticking and calling the bottom. Okay, I'm a trend follower. That's why I tell you to read that book. That's why I share that trend following book at the academy. You got to be a trend follower, and so you follow the trend. When the trend breaks, you get less aggressive. It's that simple.
You know,
All right, Godfather, you got anything else?
well, I'm going to talk for a second about something interesting. So you just mentioned something that triggered my thinking. You talked about you got to cleanse your mind of your top equity, right? Earlier this year, I'm just going to talk personally. I mean, we took some beatings, and I took some real hammer beatings on some of these earnings calls. I had loaded up way more than I had weighted into the other portfolios and stuff. I mean, personally, I was real heavy in some of these things. So I took a real beating. At some point, you have to say to yourself, okay, wait a minute. All right, I got to get back to the fundamentals and the grind. And I have to back up a little bit, and I have to go into this and get back to the mechanics that we know work consistently. And I got to grind out $1,000, $2,000, $4,000 a day, or 5,000 or 8,000 or whatever the number is for you. For me, if I'm clipping 15 or 20 or 25,000 bucks a day consistently, then I'm doing pretty good. I'm going to have those days where I'm off 21 grand, but I'm going to have those days where I'm up 30 grand. So, you got to grind it out. And it was funny because last night, the beautiful one and I were talking about the son of a friend of ours that's just giving him absolute fits because he won't work. He won't really go to work. He's, kind of hangs out and just doesn't do shit, right? He gets high all day and he lives in the fucking basement and he doesn't. And we have tried a million things to help this kid kind of find something that he likes and he's something that he's maybe naturally good at, and then this is leading to somewhere and how we might want this. How can we get this kid to find his home and then have a career and a job and go, right? I mean, he's now 30 years old, and I met him when he was 26 or something like that. We've been doing this. And here's what we realized. This kid doesn't want to live in the real world, man. He doesn't want to do the grind. And this discussion is leading to is the grind. I don't care whether you're a doctor or a lawyer or a stock trader or what you do for a living. There's a grind to it. I don't care if you're a rancher and every single day you got to feed the horses and scoop the poop and fire up the tractor and spray the weeds or whatever it is that you have to do. There's a grind to it every single day. There's a grind to this job. There's parts of this stuff as a trader that is hard. And sometimes you swing for the fence because you want to be you want to get around. The fact of the matter is that it's a grind. Do you think a doctor likes that he has to go and do his rounds every day and stick his fingers up 80-year-old butts every day? Okay, that's part of his grind that he doesn't probably like very much, okay? But he gets paid a lot of money, and there's parts of his job that he really likes and that he loves, okay? And it's the same thing here. So I had to get back to realize that there aren't any shortcuts. There's a grind. I got to grind it out. Now, I've been grinding it out in my own personal account for month after month here, the last 3 months. And you know what? The numbers are good. The comeback is happening, but it's because I got back to the grind. And I guess that's all I have. I don't want to lecture, but I just wanted to say that, hey, you know, it doesn't matter what you do in life. There's a grind to it. There's parts that you don't like, you know, and I'm glad I made some people laugh with the doctor comment, but
so true, man. So true.
So that's what we're trying to do here every day is, the thing is, do you love what you do enough to deal with the parts of that business that's a grind? This kid doesn't. I don't know if this kid's ever going to find a way to go. It's kind of interesting how, you know, I mean, when the family kind of enables him and lets him, you know, be the guy that he is right now, I have hopes always that he'll turn around. But there is one thing that that cures all of that. You cut the sucker off, and he has to go get a job as a barista and grind it out every day, making 8,000 cups of coffee. He'll learn real quick that paying $2,000 or $3,000 a month in rent for a studio in Los Angeles means you got to make a lot of freaking money, and you gotta find something and suck it up, right? Anyway.
Unfortunately, the story you're telling, Dutch, is not all that unique in America right now.
I know. That's why I guarantee you there's 100 people on this call that are like, I totally get what this dude's talking about. Because
and look, this is what you're describing is why some of these people here don't have a lot of sympathy for the people here. Right?
That's right.
Right.
That's right.
And so this is part of this political problem that we have, guys, is there's not a lot of sympathy because the work ethic and the time, the grind hasn't necessarily been put in by the youth. Now, some of those people, they don't deserve it. But there are some young people that out there deserve it. And that's what we have to do as Americans. We have to find those deserving people, and we have to have a system that allows them and their efforts to rise to the top and succeed and push us all forward. But that's my soapbox I'm going to get off of.
Well, you know, we've experienced the flip side of this, which is we have some people around us here at Carnivore that are young and smart, and they went out on their own and took their love of what they do and their genius and created a life and a business for themselves, and they're very successful. And let me tell you something. To see a young person in their late 20s, early 30s do that, it gives me hope.
We had 3 young men, or 2 young men and their father, at the last academy in Vegas, and they were well on their way to being very successful. It was a great interaction, and they were hungry. And there are great youths out there that are ready to do great things, man. Hey, we appreciate all y'all being here so much.
We rock it. People are saying that with the banking thing and the rates, the real estate market seems to be opening up a little bit. And I anecdotally, we've got a couple cabins here for sale in Gatlinburg, and we're getting showings again. So they've been sitting for months and months. So it has real estate, and so this looked like it's turned. So I wanted to ask you about
this. This is, look, the real estate market is driven by rates more than any other asset class. And so if people want to see housing start sort of resurging again in terms of sales volume, right? And I saw today that existing home prices surpass new home prices for the first time in history. Okay, for the first time in history. Why? Because if you're in an existing home, you have an existing mortgage, you don't want to sell that home, right? So the market is stuck, all right? And there's no way this market's going to unfreeze until rates get driven back down. Look, the 200 week and the 50 week is around 4.2 and 4.1. You're going to need to see us get down here and then ultimately break, this trend. That's a terrible line. You need to break this trend line to the downside, right? This needs to go down. And then we need to break this. Because then you've broken that plateau and you can arguably say, okay, wow, now we're headed back down into 3.5. That's what gets Rocket Mortgage to, $40 a share is a 3.5 10-year. I mean, that's all it would take.
That's still where people are going, right? I mean, that's still a viable.
Oh no, they're going to be the largest originator in the country, man. And look, you bounced off the 200 week. This has been a tough stock.
Yeah.
The guy that owns is a billionaire. I mean, he's running this for the long term. They're using AI. I mean, look at this thing. He IPO'd it at the worst possible price, but this might be,
The
that common
longest
IPO
recovery.
Where you kind of parabola out and then you get your little handle going and then maybe
For
hold
sure.
that. Right?
It's just been a long time since I've had to coordinate showing instructions. So
Hey, look,
that's what
I would
makes it
love for rates to unlock the housing market. It's a whole leg of the economy that's dead.
Yeah.
Right? So good question.
Cool. Thanks, guys.
Thanks, guys, so much. We've been an hour and 40 minutes.
Thank
You guys
you,
are
brother.
fantastic for being here with us the whole time. We love you. Hey, we'll announce hours of operation because we got Thursday half day and Friday markets closed. So just keep that in mind.
That's right. And any changes that you all make for Monday as well.
Yep. All right. Thanks, guys.
Thank you,
Thanks for being here. We love you.
Bye.